try to hold on to. The nature of thing is that this is happening.
Swinging away.
It's going to move away from you. And whatever you try to avoid and push away from you is just a question of time until it's going to move like pretty close towards you.
It's gonna come towards you.
If you don't want to have a life that is too shaky, don't touch the water. Because in the moment you touch, your touch is the initiation for the ripples to appear. Same way, you want to follow that goal, you want to have it easy along that goal. Don't touch any additional water along your goal.
What's up, guys? Welcome back to the channel. Now we're going to go over a couple things today because I think it's time. I think it's time where the market's finally going to reject off that 200 simple moving average. And yes, we have 2 more days to go in the market. And then we also have jobs report in the morning. So make sure you pay attention to that. But let's actually talk about this because there are certain stocks today like AMD, NVIDIA, Amazon. They actually did hit some nice rejection areas, especially Tesla. I want to talk about Tesla in a second. But yeah, we're at the 200 on the simple moving average on a lot of these, or actually every single index. We've been just consolidating for the last 3 days and it's just been trading sideways. Now, after close, we actually did break a support level that I do want to talk about. And usually I don't really talk about it, but you know, I think it's time mostly because I kind of want to educate my followers, especially my Discord members. And by the way, we do have a Discord if you want to come in. The link is in the description or in the comments. We're doing incredible, guys. We're about to hit around 225% for the year. And I'm talking about 240, 220% growth in probably, actually in 3 months, almost 4 now. But yeah, congrats, guys. Especially congrats to those gains, especially in the Discord. I saw a lot of people posting them today. But let's actually go over this because I think it's going to be super important. This is going to be a learning curve. We're going to talk about EMA today. And the reason why we're going to talk about EMA is mostly due to the 45-minute chart because it actually broke support, and that can give you a more of a leeway on how to spot these tops. So like say if you're trying to short or buy calls in the market, this is a good learning curve for you guys. And I think that, you know, everyone should know this. No other YouTuber talks about this and it just drives me crazy. So sub to the channel, let's grow together and let's actually get into it. So on the 45-minute chart on the S&P 500, I do want to pull up the EMA. Now, before I do that, what I want you to notice right here on the S&P 500, we are consolidating right below that 200 simple moving average. Now, as we do that, we've been doing that for about, I think, a week now. But what I want to talk about is the 200 simple moving average is mostly due, you know, you can actually spot when we're about to go into a bear market or a bull market. So just make sure you understand that. When you do break the 200 simple moving average, usually you start your bear market. When you break above it, usually you start your bull market. And now we're at the breaking point of this top in this 2023 channel in every single index and every single Mega 7 stock. So let's actually go over this. So let's actually go over the 45 EMA, and I kind of want to show you this. So it's just like SMA. If you don't understand SMA and EMA, I'm just going to give you a quick rundown so you can actually understand it. When you have the 10 and the 20 and the 50, I'm going to leave the 100 simple off. But yeah, so when you're like doing this, let's actually pull up a little bit more of a time frame so you can see. So when you're doing you're trying to play with the simple moving averages or EMA, it's actually the same if you don't know that, especially with 50. Crossing over to verify that a drop is coming, or crossing over for, a verified bull push. When the 10 is under the 20 moving average, that means the bears are in control. When the 10 is above the 20 moving average, that means the bulls are in control. So usually when you have the 10 crossing over like this, going under the 20, and then you get that 50 crossing over at the exact same time, notice how the bears take finally control. Same thing with the bulls. When it crosses over like right here, bulls were still in full effect, and then we started just pumping really hard. So let's actually go over in a smaller time frame. Let's go to the 45 EMA. It's the exact same layout if you don't know that. So hopefully this can, this video can actually teach you something, because not a lot of people know this actually. A lot of people still just use straight indicators because they think that's the key to trading for some reason. I don't get why, but let's pull up the EMA. Let's go to the 45-minute chart. Let's actually zoom in. And as you can see, let me turn on the 200 simple moving average. Now you can see how we've just been consolidating and consolidating and consolidating for the past couple of days, since really we've just been consolidating around since the 23rd, Monday. We had that really nice push up, and then all the market's been doing is just trading sideways right under that 200 simple moving average. Now, as we're coming into a close, you can see how we're breaking this right now as we speak, and you can also see the 10 starting to get under the 20 simple moving average and the 50 crossing. If you look at the NAS 100, same thing. We're finally breaking it. It's finally getting weak, so be very careful. This is going to be a high rejection zone, especially rejecting off the 200 simple moving average, this orange line right here. Let's look at the NAS 100. You can see it crossing under it right now, and the 50 is crossing over, the 10's getting under. So you could expect a lot of weakness coming in the market. But here's the thing, you got jobs report too. So it could be a really big red day, or we could rally with job reports and then just decline again off the 200 simple moving average and then just trade sideways and then get a reaction Friday on trading session and then over the weekend. So I kind of just wanted to point that out. If you are, trading, is the market's showing signs of a lot of weakness. Now, there is a lot of talks with Iran. I don't understand that you traders sit there and watch the news daily about it. It is completely pointless. If you don't understand, I can tell you right now, Bush did it all the time when we were going into Iraq. You can go on YouTube, type in, did Bush say we won Iraq war 11 days after it was started, or whatever you want to call it. Yeah, he was on a ship saying, we have control of Iraq. Well, went on for another 8 years. Stop following the news every single day. I'm going to tell you right now, it's not worth it. Now, when we do get these hard push-ups in the market, like right here, let me pull this up. When we got this hard push-up right here, everyone's like, Trump tweeted something. No, guys, we actually just hit the support of this channel that we've been going in since the mid of January. That's all we did. So stop trying to justify news to the reactions of the market, because 99 or 90% of the time, it's not with that at all. It's just you just don't know how to do TA, or you're following a YouTuber that literally just talks about, oh, Iran did this. Guys, there's nothing going on yet. Now, here's the thing, though. Trump did post a warning saying Iran has 5 days to reply. If we have boots on the ground, that is going to affect the market. Talks with Iran is not going to affect the market. There is 2 dictators, I guess you could say, in Iran that is saying we're going to make a deal, and then there's also another one saying that we're not going to make a deal. There's not going to be a deal. We already know that. If you are young and dumb, listen to the 35, 40-year-old guys. We already can call the bluff straight out. So unless if we go in with boots on the ground, or there's a nuke shot off, or something dramatic like that, that's going to affect the market. But news articles coming out at the right time, and you guys are saying the index is so manipulated. No, it's just because you don't know how to trade. And I guarantee you, when we do reject off of this 10 simple moving average on the indexes, they're going to put something else out. They're going to justify this drop. Guys, there is a thing called news propaganda. We've been doing it since probably 1900, before World War I. That's what I'm saying. Stop getting into the hype of following the news every single day. It's going to drain your energy. Do your TA. Now, it's pretty basic, guys. If we're hitting the 200 simple moving average and we're trading sideways and we're about to reject off that 10 simple moving average, go with that than, oh, Trump tweeted something. You'll do a lot better on your trading, I'm telling you. Now, let's go over the Mega 7 stocks, because I think this is important. There is a couple good short opportunities that I do want to point out. Let's talk about Google in a second. Let's actually talk about Tesla. So video, not financial advice, educational purposes only. But Google, once again, came up to the 10 simple moving average. If you've been following this channel a lot, I talk about how every stock has their own personality. I talk about how Tesla usually pushes up to the 10 and the 20. Rejection right here. Good shorting opportunity. Definitely pay attention to around 350 or 355 for that support to hit, not financial advice. Let's actually look at a couple other ones. Also, AMD, push up to the 100 simple moving average. I need to put that on actually so you can see. This is going to be a high rejection zone. If it does, I could see it definitely pushing past that 50 moving average and probably going back down to the 10 or the 20, especially with the triple Qs about to make another rejection. So you are looking at a support of around 202, 201, and then also on AVGO. AVGO, I think, had a good shorting opportunity. It kind of already started, so that's your fault for not joining the Discord. I was talking about it all day in the Discord. So we did hit the 10 simple moving average. You can see the 10 getting under the 20 moving average. And then you do have a temporary support, which you can see we've been hitting a lot. You do have a support around 310. So if you did short at the 10 simple moving average, if you hit 310, short gains, but gains are gains. You know what I'm talking about? Let's look at Meta really quick. Oh, and by the way, there's a lot of drama going with Meta. Yeah, Meta and Google is actually getting sued. The reason why is because social media is addictive. And what is crazy is they're actually about to lose. And I'm going to tell you right now, their first case, if they do lose this case, that's going to trigger a lot of other civil matters coming into the market, and they're going to just win, because the reason why is they can't use the same defense every single time, because if they do, they know the other party is just going to know what they're going to say. So just be very careful with that. With Meta, it did reject off the 10 simple moving average. You do have a support right here. If we do come into it around, probably around 500. Now, is that going to happen tomorrow? No. So just make sure you realize that, picking your strike price. Now, rejecting off this 10 simple moving average, you could aim for like 350 or around 550, 540, not financial advice. And let's look at Amazon. Microsoft is getting destroyed. I'm so curious what's going to happen, and it's already playing out. I'm definitely going to. Geez, too bad for Bill Gates, losing a bunch of money and in the files. Let's actually look at this. Now here's Amazon, hasn't made its rejection yet, but is above the 10 simple moving average, which you can see how we reject a lot off of here. It's just like Tesla. So if it does get below, if it does get below 209, you will start to see this drop a lot more. I wouldn't really buy a strike price around 190, not financial advice. So just be very careful with that. And then let's look at Microsoft, the one I've been talking about. This is really, it just got my mind blown. Like, I've never would thought Microsoft would be the one that would just say, screw this 7-year channel, I'm going into new lows. Like, that is wild. And dude, look how big Microsoft was actually. I need to update this because their market weight to the market is definitely cut in half probably by now. But yeah, Microsoft breaking the 7-year channel. What kind of lows is it going to go to? Now, what I'm thinking though is, if you are trading Microsoft, if you are trying to say, well, Microsoft is so cheap now, don't do it, Jimmy. Don't do it. What you really need to do is just wait for the triple Qs to hit around 475 to around 525, the bottom of the bear market, and then look at Microsoft. Trying to catch a falling knife is not how you want to play this market right now. Because I can tell you right now, a lot of people are about to get wiped, just like how people were when we were at 635 in the triple Qs, and then Microsoft said, oh, sorry, Buffett just sold, or was it Buffett? I can't remember. A guy sold like 6 billion shares, which, common sense, I would too at the top of the channel. But yeah, it just destroyed itself. So be very careful with Microsoft. And then also on NVDA actually had around a 2.5% push today, actually. That's what really just kind of held the market. But as you can see right here, you can see it's just sitting on that 200 simple moving average, just waiting to break it to go into its next 2026 bear market. So let's actually zoom in because it did hit a simple moving average. I kind of just want to show you. Let's pull that up really quick. So it did hit the 10, and look. So this is what I'm talking about also, especially you Discord members. See how this 10 and this 20 is coming down really fast? And you see how the 200 simple moving average is right there? You have 3 walls stopping NVDA. And this is what it's going to look like on the indexes. I'm going to show you in a second. But this is going to be a super high rejection zone. So if we do reject, look at 169 for your next rejection, the support of the 2023 bull market channel. Let's actually talk about that really quick because I do want to point that out because I think it's actually super important. See, you can see it here right on the NAS 100. And this is where it kind of blows my mind how some people are like, buy the dip, buy the dip. For one thing, you're an idiot to buy the dip, breaking the 200 simple moving average. But to not see this where the 10 is getting below the 200 simple moving average and then the 20s catching up right behind it, within next week, all the 10 and the 20s are probably going to be below the 200 simple moving average, and you're going to actually see real selling coming in the market. We have not had a real sell-off in the market. I'm going to tell you right now, it's not going to be pretty. It's not going to be slow. It's not going to be, oh, we're dropping 200 points a day. No, you're probably going to see the indexes probably drop 600 points a day. So be very careful. Now, if you are shorting the market, let me tell you this from experience of trading between 2 to 3 bear markets. If you are trying to learn when to sell your puts in any of the Mega 7 or any of the indexes, you need to have a realistic drop idea. Saying the market's going to crash, I'm going to hold until 300 in the triple Qs, you're an idiot. You should stop trading. A good trader is going to say, well, let's see. The first drop will probably drop to 550, and then we'll probably find support and have a really hard push up back to the 200. How did Jimmy learn that? Well, Jimmy's been hanging out with me, and we've been talking about it on this channel a lot, actually. What you will see, most likely, in between this bear market, is you will see a drop, probably not this slow, honestly, with Trump, and then you will see a push back up to the 200 simple moving average. You will see a harder drop, and then a push back up to the 200 simple moving average, and then you'll see another drop, and then you'll get a dead zone, and then you'll push up to the 200 simple moving average, and then you'll go into your bear or bull market. So, Jimmy, do you need to think that you're just going to free fall in this market and there's not going to be any dip buyers? No. So have a realistic, if the triple Qs is hitting 550, 560, 565, get out of all your puts and just wait for that push back up to the 200 simple moving average. That's literally how bear markets work. It's literally just a inverted bull market. If you want to know what I'm talking about, is let's look at it really quick, and let's look at it at a clean way too. So let's just pull up the 200 simple moving average. If you are a new trader, this is what I explain to my people in my Discord all the time. A bear market is just an inverted bull market. A bull market is just an inverted bear market. See how we reject off the 200 simple moving average? 1, 2, 3, and then we break. And then see how we find support on the 200 simple moving average. I know, that's mind blown. No other YouTuber is going to tell you that. That's literally why I made this channel, because I'm so tired of the dumb TA Ron puts out, Ricky, all of the other YouTubers that say, look at this volume profile. volume profile is the exact same thing as your SMA levels, your EMA levels. They all work together. Have a clean chart. You don't need 5 indicators to trade.